Maybe before we started here when we signed the first term sheet. And we are going to share, Gal is going to share some of the experiences that we had along the way. So thanks, Gal, for joining us. Tell us a little bit how you embarked on the idea, how you teamed up with Yav and Avital, and a little bit about the very, very early stage of Pagaya, even before we met, which was fairly early.
So first of all, thank you very much, everyone, for coming. It's a pleasure to share the story and mainly the learnings. I think we did a lot of mistakes. So if that could help anyone save you, that was definitely worth it. Avi, for us, is a special person. He's almost like a co-founder. So it's exciting for us to be here as part of the Viola group, mainly for the values and what it takes to build a $8.5 billion at the peak, $1 billion company right now, from the very early days that literally no one believed in us, and up until staying together in the best times, in the tough times. And first of all, I want to open with a big thank you.
I enjoy every minute, so.
And now we'll start.
We'll keep doing that for many years.
Yeah, and now we start going to the content. So I want to start actually even before the moment of ideation. For the one of you who didn't know, Yav and myself met in London prior to 2016, something like 2012. And Avital we met through his brother, that we became friends. But we are one of the stories, I would say, in Israel that really the company started from the friendship. And we started back days, even before Pagaya, to have real estate projects. And we were entrepreneurs much before we started a tech company. And I will never forget one of the phone calls that I had with Yav in the early days. And I told him, listen, real estate is nice, finance is nice, but tech is where the magic is happening. And we cannot allow ourselves to consider ourselves as real entrepreneurs and successful people in the world that want to have an impact without looking on the avenue of tech and trying to see what we can do. We didn't even know the name Avital back then. And we started the real estate stuff, and Avital was one of the partners with us, and that's how we got to know him. And later on, we did things in finance, actually in the CLO world. That's where I came from, in UBS, early days. And in one day of a really long conversation between the three of us, we figured out that there is a total new finance market that is called, back then, if you remember, peer-to-peer lending, the very early days, but was really consumer credit. And as long as we kept getting deeper and deeper into the numbers, we were shocked. It was like $4 trillion market that, like, literally working in UBS, in one of the biggest asset managers in the world, I didn't even know it exists. It was very, very obvious that when you take the capabilities of machine learning and data science, and Avital back then worked in Fundbox as the first data science, it was clear that you can do magics with models to be able to price risk better, to be able to do these things. So for us, the light bulb, if everyone wants to think about it this way, so it was really the power of AI and data science specifically that could embark so much potential of growth, impact, and value in markets that most regular people in finance didn't even hear of. So that's the really first days.
What I'm interested is actually to share your experience about what is the right business model. You know, we started with one business model. We invested in one business model, but you guys were smart enough to change it. So tell us a little bit about the initial business model, why you have changed it, the benefits of that business model. And
so we started as an asset management that is using AI. That was the premise in the beginning. When Avi invested in us, I will never forget, he told us one day you will manage money of countries. And actually with GAC, which is a Sovereign Wealth Fund of Singapore, we actually did it. But that was very limited. The limited part was that not enough, and still today, by the way, financial markets became enough efficient and electronic driven, so we will be able to grow it as we should. And we did a shift towards helping lenders in the US with the same technology, with the same tools, with the same capabilities, to be able to approve more loans and to be able to say yes to more customers. And there are two things I want to share on that. Is first of all, the pivot that we did was easy because the first business model didn't work well enough because we didn't grow. So it was obvious that we have a problem. And it took us a while to face the problem, but we figured it out and we changed it. And the second piece is, and that maybe goes to the CEOs who are sitting in the room in the earlier stage, is everyone is asking, when do you know you have a product market fit? And when you know you hit that point that you need now to drop everything and just go after it no matter what. It's a little bit like love. When you see it, you feel it. And in 2019, actually before COVID, we had the initiation of the idea and the change, and suddenly the clients didn't stop calling. And they wanted to push us to integrate faster and faster and faster. And it takes you a few months, but then you look back and you say, I really have a product market fit. And I think for us, if you will ask the three of us, the birth of Pagaya was 2019. From 2016 until 2019 was to look what is Pagaya. And in 2019, when we found that, what we call the extended platform, or the ability to say yes to more customers, which was very helpful, that the lending industry in the US was really taking over by fintechs, and personal loan, which was a $200 billion of origination a year, moved in 5 years, 35% was driven by 10, 15 fintech companies. It's unheard of. There are not that many fintech revolutions that happen so quickly in such a traditional market. And that was the moment for us. And from that, we connected to them, and we connected to auto lenders in the same concept, and point of sale today, which is very hot, and Klarna. And that was what Pagaya did, and the pivot and the really story behind it.
Maybe I would like to emphasize one very important thing. You know, I started my career as a fintech entrepreneur when fintech was not a term and there were no VC around. But I was involved in B2B sales and still investing in B2B companies. But I believe that two of my biggest successes, both Payoneer and Pagaya, have a business model which is volume-based. And a volume-based business model, when you grow as your customer grow and as your usage grow, are the fastest growing. And it's not by mistake that Pagaya got to $1 billion of revenues and profitability within less than 8 years from founding. It's very rare. It took Payoneer a little bit longer, but again, two companies, Israeli-born global leaders that got to $1 billion in profitability by having a volume-based business model. It's very important to understand not just what is the right business model for you and your customer, but also what's the right business model to really create value and to enjoy tailwinds even when there are headwinds.
And I want to add something else. When you're dealing especially with fintech, when we met most of the VCs in the early days, everything that was not a SaaS or selling a technology purely, everyone was like, no, it's not for us. When you're dealing with fintech, from our opinion, you should not be afraid to go deeper into finance too. A tech is an enabler. It's the strongest enabler, the strongest growing engine, the best way to drive the impact and the change. But at the end of the day, you are in the industry of finance. And therefore, to have business models that are risk-taking, that are balance sheet heavy, that are volume-based, etc., is, I think, one of the biggest... Regulated, which is one of the biggest unlocks for massive companies, and you look across fintech. And one of the things we liked about Avi, he was not afraid from that. He was not like, oh, balance sheet. No, like, if you want to be in fintech, you need to have the understanding of that. And that was really, for us, the explosion of growth, the ability to take the right risk, to be able to build a real global company in a massive way, in finance with technology.
Okay, so that's actually lead us to your funding story. You have raised the seed fund, and then, I'm talking about the private rounds, not the public offering. We'll get to the public offering. Bear with me. But tell us a little bit about your experience, your criteria, your mistakes in fundraising throughout the way.
So for Pagaya, because of all the differences and the things we spoke, to raise seed, round A, round B was tough. C was already good because we started to have the leaders as becoming the followers that they've been in the previous round. So actually, Klal Insurance, for whoever doesn't know, invested in Pagaya in round A. They did, I don't know, 50x on the money. Oak, HCFT, the same. They were participating in round B, and they led in round C. But I actually want to tell one story. That is the 2021 year's story, that we started to look for the next round, and GAC did the round D, which was inside COVID, and they called to tell us they started to do due diligence in August. And then COVID happened in March, and they called us in April, and they said, thank you so much for your effort, but unfortunately we'll not be able to fund the round, but I'm sure you will understand as a CEO of a finance company. And I said, yes, of course, and I hung up the phone, and I said, what? And I called back and I said, good joke, find the money. You took us from August until March, telling all the story of you're the biggest institution in the world and money is nothing for you and we just need to do more diligence, and then you call me and say, no round? No. You say no round, I don't have a company. So let's do that. You take 2 weeks and you find the money and let's do it. They did. And we closed round D. We did instead of $100 million, $50 million, and gave them an option, and they never did the option, and we took the option, whatever, thousands of stories. But the reality was to make sure you stand on your own was the right thing to do, even in the toughest days. That happened in March 20, when's COVID started, 2020? I think 6 months after, or maybe 9 months after. Scott Schleifer from Tiger Global put an offer on Pagaya to fund it at a $3 billion valuation. Was 400, not want to fund. 9 months after, $3 billion, $250 million. And I looked him in the eye in the Zoom, and I told him, I'm willing to accept it only if you promise to wire the money in 14 days. Term sheet, non-binding. He said 14 days? What's the problem? The money was in the account in 14 days. What happened in Fintech in 2021 is unbelievable. And again, to the CEOs and founders in the room, when the day comes, take it all. Don't wait. Sometimes it's happening. The difference between not happening to happening, 3 months. But you need to remind yourself that this is your opportunity to take it. I had the luck that I had 2 amazing co-founders, that the 3 of us kept all of us honest about what is reality. Because the biggest mistake you do in that is like you don't realize that the world has changed. And now we are like in the 21 of free money and not in the 2020 begging to GAC. Because 2 weeks before that, I still begged to GAC to give us the same money at a $400 million valuation. And 2 months after, it became what I just said. So founding team to keep you honest, know to take when it comes. After the $3 billion with that, we did a $5 billion with Whale Rock and Tiger again and Head of Sophia. So we had a good run in the private. And now let's wait for the other chapter of the public.
These are true stories. And my take there is, if you are confident in what you are doing, don't be ashamed to use your Israeli chutzpah. You build an amazing company. both amazing management. Tell us a little bit about the build-up of the management, lessons learned, changes, and how do you maintain this winning DNA at both sides of the ocean?
I think the biggest decision, I think, and that is something I take personally for myself, is to move as a CEO to the United States. I had the privilege and the luck to have an amazing partner, Karen, which is sitting here with us, who suffered all the way. And I think that was the fundamental thinking of looking at Pagaya from round A as a global fintech public company. When we opened the US office, you want to guess how many Israeli worked in the US office? If I'm considering myself Israeli, yes. The answer is yes. And the reality is that I think Israel is the best place in the world to start a company potentially, better than the Silicon Valley, especially in fintech. But the reality is that there is something about the institutionalization of the United States that as a young entrepreneur, you still don't understand it and you don't appreciate that. And you even, we call American a little bit of bokim, and they don't understand it, they're squared, etc. They just a system for 300 million people who works in the biggest economy in the world. So the long story short about management hiring in general, building a company culture is to respect what each culture is bringing and building that as a building block of Pagaya. And there is the Israeli chutzpah and the innovation and second to none and the tech capabilities that the Israeli research team here is sitting, both Elad and Itamar, which are leading all of our data science and more likely than not, one of the best teams, if not in the world. And they are leading innovation and tech, etc. But in the same time, what they know more than anything is that they are working hand in hand with risk managers, with product people who are coming from institutional world, from banking, and bringing that knowledge inside Pagaya and not believing to ourselves because we are Israelis, we're the best. We are best in what we're the best, and we're not best in what we're not the best. And that was really the fundamental, I think, way of thinking that we had as a founders from very early days. And we always hired better than us, and we always paid more than what we earned. And I do encourage that as a very big, strong, fundamental build for the future.
Thank you. So now, you went public via SPAC in June of 22, like really when the markets were just starting to decline. And it was a tough decision to go public. We knew that we were going to get hit. The markets were very volatile, but you still decided to go public. So tell us a little bit about your consideration to go public, the advantages, disadvantages, and what you would advise the entrepreneurs here.
I think Yav did an interview for a VC. I cannot say here the name, so I will not get shot. And there is one chapter there that is the liner of this. Going public is a strategy. It's not an exit. That's what it is. Going public is a strategy. It's not an exit. And when you think about it as a strategy, you take the right decisions on strategy, even if they're tough. Exits, maybe not, because you want to maximize your value, you want the staff, but that's not happening on strategy. So I think for us, going public was strategy. We needed to go into the banks. The banks in the US will not respect companies that are not fully SEC registered, etc. Retrospect, having the mirror every day on who you are, what you are, like you can tell.
It's the real acid test.
You can tell lies to yourself all day long, as much as you want.
And stories to private equity, guys.
Stories to private equity. To lie to everyone all the time doesn't work. That's the magic about public. And I think Scott will share with you soon how true it is and painful. But that's the best feedback loop and mechanism that keeps companies alive for many, many years and improving and improving and improving.
Okay, so last professional question. You guys were one of the first companies that I've known in the financial service and the fintech space using AI. Where do you see the role of AI in the financial services, especially in lending, and going forward?
So I have a little bit of debate about it with Vital. I think generative AI is going to change completely the behavior of people towards lending. When you think about the event of delinquent loan or a default, the amount of time it's happening actually because something really happened that you cannot pay the loan is very little. It's about being aware, it's about planning in advance, it's about keeping money aside, it's about doing everything that human beings are not great at. Machines, because it's emotional piece. Learning when to tell you to put $50 aside. Speaking with you as a collection agent or a servicing agent in the right tone that drive your ambitious to pay and not to pay. Managing all the emotional piece of a person to do the right thing and continue to pay, I think is the next big unlock in lending that didn't even started. I hope Pagaya are going to be a lead in that, although we didn't start it even, because for a public company to go into that deep of journey is a real decision that you cannot take on the way. And we actually would love to see younger startups that are embracing that and to kind of like partner with them and to think about that. So I think the role of AI in lending specifically is at the very, very, very early days, that only underwriting has really been driven by that, and there is many more to come.
Okay, Gal, really thank you very much. An amazing story, many years to go.
Thank you very much.
Get the company from 1 billion to 10 billion, and the rest we'll figure out. Thank you very much.